Yo, what's good, y'all? This is your boy TheFundedTrader coming at y'all with another video, man. And honestly, in this video, I'm actually gonna share some good news with y'all, man. I actually got my second payout on my 25K TheFundedTrader account, TFT account. So just last week, I just received like my second payout, and honestly, it's a good feeling, you know. I just became funded like about earlier this month, back in like September, late September, early October. And the fact that like I've already secured 2 payouts, you know, from a funded account, you know, it feels pretty good, man, you know. And honestly, it just motivates me to keep going even further, to keep being consistent with my trading and actually like treating this like a business, you know what I mean? So there's that. And also too, hopefully, you know, this video also like motivates you guys also, you know, to like keep grinding, man. Cause like, you know, I'm honestly gonna do a second video about what the mindset should be once you get funded. I think that would be a good video idea. I'm gonna work on that. But anyway, in today's video, I'm actually gonna be sharing you guys like, you know, my current account performance and also too some of the trades that I took today, because currently as it stands, we're about $800 in profit. Yeah, we're about $800 in profit. I have my account number blocked off because I don't want anyone to like know like my account number or anything like that. So yeah, so yeah, I don't want nobody to hack my shit. But so with that being said, man, you know, we're just gonna just show you guys like what my current trading performance is. I'm up $800 on the day because I took some trades earlier today that you know, I took 2 trades earlier today. I actually have them on my day trading executions Notion journal. I have those documented, so I'll show you guys what I was looking at during that, and then I'll also show y'all my current trade idea right now. So currently right here, these 2 are the trades right here that I took early this morning, this Wednesday morning. These 2 right here. So I have this entry right here on the 5-minute time frame. On 5 minute, no, actually I entered it on the 3-minute time frame because there's a fair value gap right here. Actually need to update this to 3-minute fair value gap, so I know, right? And also too, I'll talk about like what I saw during this time and everything like that, because this was an area that I've been targeting, because this area right here is actually my 1-hour trade that I have marked out. Right here is a 1-hour breaker block, right here. Actually, go to 1 hour really quick. So currently right now as it sits, this trade right here has already been executed in, and basically the 2 trades right here that I took today from what I saw this morning, and then also too, right now FOMC is going on, so the interest rates came out. This is live. Interest rates came out, and there's been no change. And I guarantee you right now that Jerome Powell, he's giving his statement, and there's probably something that I'll tune into a little bit later, the aftermath, to see what's going on. But initially at the 2:00 p.m. hour, they have their press conference at 2:30, my bad. But initially at the 2:00 hour, right, we went ahead and opened up and rallied up back up into the breaker block. And now currently as it stands, we had a high of, we had a high of 14,568 right here. At the open from 533 right here to the 568 level, and now currently as it stands, we're trading below that high right now. So we're gonna see how this plays out, because right here on this hour trade, this is basically a higher time frame trade, so a day trade. So this is a trade I'm looking to hold for a couple days or so. We'll see how Wednesday closes out at the end of the day, especially with FOMC today. Yeah, we'll see how that plays out. But currently as it sits, as it stands, from these 2 trades right here that I took this morning, these 2 trades right here, basically I was trading, looking to trade up into my hourly breaker block that I have right here, which is also that execution that I have right here, right, that's currently open. And this 1 hour bearish breaker block is right here, right? It's over this way, right here. It's actually a 4-hour breaker. My bad, because we go up a time frame. Yep, there it is, right there. See that? Not only is it a breaker, but it's also an order block. Also, it's also a previous bearish order block. I'll have to go and find that teaching from ICT. It's in his core content. It's in one of his core content lessons, right? And I remember seeing something like this specifically, where he talked about like where there'll be old order blocks that get traded through, right? Or they get traded through, and then they can be reactivated later, right? So in this case, this is a bearish order block still, and as you can see, we have some bearish price action through it, right? Because this is in this instance right here, this becomes a bullish breaker block right here. But in the sense right here, it's also still a bearish order block, because right here it traded through it, and now we're back rallying back up into what was a previous bearish order block, and now it's being activated, and we potentially see some higher prices, because like I said, we do have FOMC today. That currently right now is what's supporting my idea of we should see lower prices, because I don't think we're necessarily done heading lower altogether, especially to finish off the year. I think going into 2024, I think we're gonna still be seeing ourselves selling off, because basically over the past 9 months, from like late 2022 to early 2023, like the markets, especially the index markets, they've really been on like a bullish run. So over the past 9 months, we've really entered an overbought stage over the past 9 months. And so when things tend to be overbought, what tends to happen is they tend to sell off, right? So this was the first weekly discount area that I have marked, but it looked like we may go ahead and dig into it a little bit deeper, right? Especially with this being like a quarterly shift, being that this is the last quarter of the year. Generally in the last quarter of the year, that's where we tend to see a sell-off. So the months from like October, November, and December, you normally see a sell-off. And then when the January, February, March time rolls around, that's where you tend to see a bit more of a recovery. So just based off of that, for right now, that's what I have supporting lower prices right now. Also too, based off of the Fibonacci retracement tool that was drawn from yesterday's range. So Tuesday's high to Tuesday's low of yesterday, right? Currently, this 1 hour order block / breaker block, also my entry area. This is also in the 61.8 retracement zone of the Fibonacci retracement tool. So that's also another confirmation for me to kind of lean towards lower prices, because last week we tapped into this weekly order block right here. If I go to the weekly time frame really quick, see right here, weekly order block. We came and tapped into it, and we should start heading lower. And I honestly think we should hit if not the end of this week, then the start of next week, we should probably run the weekly. We should probably run last week's low, which is right here. So the weekly low of October 23rd to October 28th, right? This was last week's low. So this is the just gearing off of what's transpired over the last couple of weeks. I'm anticipating the low of last week to be taken out, and so these confirmations and this idea is kind of what I'm leaning towards right now, based off of that. Also, some other confirmations that are going on in here, and what I'm kind of using to support my idea to go ahead and run last week's low. You have to go ahead and run last week's low. Also, is let me find it really quick. Okay, some other things I'm also using to support my idea is we have a daily fair value gap right here. If I go to the daily real quick, we have a daily fair value gap. So we tapped into this daily inefficiency. This fair value gap is also a sell side imbalance, buy side inefficiency. So we've officially tapped into this area. Also too, if I were to take a Fibonacci retracement tool and use the gap right here, so measure the gap, the fair value gap itself, we're also in the consequent encroachment, or would this be consequent encroachment or mean threshold? To me, it kind of means the same thing, but I know how ICT talks about it. He likes to talk about things specifically. So go check out some of his videos. I can't remember which video specifically, but go check out his videos, and he's definitely talked about consequent encroachments and mean thresholds. I want to say with fair value gaps is mean threshold, order blocks is mean threshold, but wicks is consequent encroachment. So currently right now as it sits, we're sitting above the mean threshold right now, but this is on the daily. We have a few hours left before the market actually closes, but we're also into that 61.8 level in this Fibonacci retracement tool. So right now as it sits 61.8, we have this breaker order block on 1 hour. We have this daily fair value gap, and then also within the daily fair value gap, we have a 4 hour fair value gap, and that's this gap right here, the one with the golden block. This one right here is that 4 hour fair value gap, and within that 4 hour fair value gap rests this what used to be a bearish order block. All right, I'm gonna just go ahead and mark it an order block, so as to get rid of any confusion. But yeah, so here we have an old bearish order block that's now being activated inside of a 4 hour fair value gap, and so yeah, that's kind of what I'm using to support my idea. Right now I have my stop loss set up with this high right here, because I really don't see any reason for it to head higher and, you know, tap back into this fair value, this weekly order block, especially because from here, yeah, based off of this Fibonacci retracement tool right here that's marked out right here, you can see. So from this high, this is Tuesday's high of last week, to the low, right? So from this high to this low, this impulse move right here at the 61.8, it kind of makes, to me, I'm subscribing more to the idea of we run this low instead of running this high, because we have all of these PD arrays, we have all of these premium arrays resting in here, right? From this impulse move, from this high to this low, we have all of these premium arrays, which are also confluences that are resting right here to kind of like, which is what I'm using to form my bearish bias right now for this week. So I'm of the idea that we should run this high, last week's low, not high, but last week's low, right? Instead of running last week's high, because it just makes it just makes a lot more sense, right? Just based off of what I'm seeing right now in the current price action. Can this change? Yeah, but as far as right now, I have my stop loss there. That's what I have it for. That's what I'm paying it to do. And yeah, from there we're just gonna rock out. Excuse me, sorry I burped. But yeah, from there, y'all, we just gonna rock out, man. We're just gonna let it do what it do. I'm gonna talk about the trades that I took this morning. These executions right here. On the 15 minute. So on the 15 minute, that's why I have the Asian session range. My Asian session range indicator, so I know when the Asian session is, because I use the what I've been learning and starting to implement a lot more is the market maker model concepts. And that's basically where you have a session of accumulation. So you see I have it right here, the Asian session accumulation. Asian session tends to move pretty slow. There generally isn't any type of like movement whatsoever, especially like if you're not trading a pair that's that has an Asian market in it. So like something like AUD USD, that's considered their considered trading hours are during the Asian session. So you have AUD USD, I think NZD USD. Most of the Australian ones fall into the Asian session because they have news events that come out during the Asian session, so like 8:30 p.m. New York time, or 8:30 p.m., 9:45 p.m. New York time. So that's why this is called the Asian session accumulation, because during the Asian session there really isn't any type of movement whatsoever. So like there's this one, as you see right here, there's really nothing in here to suggest any type of movement whatsoever. You see a little accumulation right there. Also the other Asian session, you see more accumulation. Yeah, we had like a little impulse move, but even still, it came and tapped into that impulse move, and nothing really happened until we get to London, which is around 2 o'clock. The London session kill zone, which is like 2 a.m. to 5 a.m. 2 a.m. to 5 a.m. window during New York time, right? So I'm gonna show you guys that. But basically, with the market maker model, you have a period of accumulation, which is the Asian session accumulation. Then you have a period of manipulation, and normally that manipulation occurs during London. So you see right here, I have it marked right here, the London session kill zone times, taught by ICT. We have the 2 o'clock and the 5 o'clock. So between 2 o'clock and 5 o'clock, we had a London session manipulation. Right, so we had that manipulation during London session right here, and that manipulation is basically where there's the markets are open during the London session hours, and as you can see, that's what drives price down. This is the first initial move of the next trading day, and then normally what happens is after the manipulation takes place during London, then we have the distribution phase, right? And the distribution phase occurs after London, so after the 5 a.m. Ending cycle of the London session kill zone or manipulation. After that's taking place, then we have what's called then we have a liquidity raid, and then we have a distribution, and that's exactly what happened here. So there was a low right here, initial run up, then that low was ran. So this right here can be considered a liquidity raid or a slight liquidity raid, and then we have the distribution. I'm gonna go ahead and cancel. I'm trying to get this marked again. There we go. So then we're gonna do that. Gonna put sell side liquidity. There we go. So that liquidity was ran, that low was ran, and then we had the distribution, right? So the run up higher. Not only did we have the run up higher, but this run up higher also created a fair value gap, right? So I'm gonna go ahead and mark this fair value gap right here on the 15-minute time frame, right? So I'm looking off of this, right? So we had the Asian session accumulation, the London session manipulation. Now we have distribution phase, well, liquidity raid, and then distribution phase. And then this fair value gap forms during the distribution. And while I was seeing this basically told me or gave me everything I needed to know that, like, okay, everything is kind of like set in place to go ahead and tap into this area, right? To tap into this area right here, right? And that was the area that I was targeting because it is in the remember it's in the 61.8 retracement level zone on the Fibonacci retracement tool. I'm gonna zoom out real quick so you can see that. You can see it's right there, that purple line that I have right there. The 61.8 to 14,544 level. That's exactly where my entry is resting. So we basically had everything set in place to go ahead and tap into this PD array. And basically just from there, so from looking at this 15-minute fair value gap, I decided to scale down lower. And as you can see, that same 15-minute fair value gap right here, within that fair value gap rests another 5-minute fair value gap. It's already been tapped into before. So I decided to go to a little lower and see if I could see anything more precise. So I went down to the 3-minute time frame. And that's this trade right here that I have marked as the blue one with the blue box, the one that was almost a 1 to 4. This is the fair value gap that I decided to use because I saw that right here they were engineering liquidity right here. So some relative equal highs right here, right? So So at this instance right here, when it tapped into this initial fair value gap right here, because looking at it, this is actually a breakaway gap right here, just going off of this previous price action. But what happened was I saw it tap into this fair value gap, and it failed to displace higher, and then it broke below this low right here, right? So it broke below this low that was created. It failed to displace above this high. And then on top of that, there wasn't really any fair value gap that formed in here, or at least not one that I would have wanted to take. Because even if there is a bearish fair value gap, and it kind of is a tiny one right here, even if you do see that, you still have this inefficiency right here, this large inefficiency right here. So this is the one that you want to be targeting and looking to be trading in the direction of what this impulse move did, not this one. This is a tiny move. This is a tiny fair value gap. This is a big fair value gap. So like generally you want to look for like the bigger efficiencies, because the bigger efficiencies, those are the ones that are really gonna drive the larger price moves. Right, and that's exactly what happened here. So it traded down into this fair value gap, which is what I have marked as a 3-minute fair value gap. I'm going to get rid of this one because we don't need it anymore. I already showed you that one. Yeah, so we have this 3-minute fair value gap right here, tapped into it, right, and we headed higher. And then we have this entry right here, because I stacked these entries. This one was a 1 to 6. My stop loss was below this low right here, or at the low right here. A little close right here, because I was looking at it from the perspective of, since we have this large displacement here, and we have an inefficient, and I basically concluded that we have an inefficiency to reach for that's up here, or a PD array to reach for that's up here. I was looking at it as far as like this low right here is protected, right? So anything above here, we're good to go, and that's how it panned out. So right here, you see I have a breaker. This is actually a 1-minute breaker, right? And I entered kind of like at the low end. I didn't enter at the breaker. I entered at the fair value gap that right here. So let me go ahead and do this as a 1-minute fair value gap. 1 minute fair value gap. I'm gonna do that. So we have 1 minute fair value gap. We'll go down to the 1 minute, show you guys what I was looking at, right? So this right here, okay, this is the breaker, right? So this is that 1 minute bullish breaker, right? Because right here, this is actually forming a 1 minute breaker block, not breaker block, 1 minute bearish order block right here, in that instance. But, right, on the 1 minute time frame, see we have another fair value gap right here. This fair value gap is resting within the top half of the 3-minute fair value gap that we have marked up already. So this 3-minute fair value gap right here, you see this 3-minute fair value gap, this 1 minute fair value gap is in the top half portion of that 3-minute fair value gap. So I wouldn't look to target any fair value gaps lower. You could, and have the stop loss down here still, but I was thinking from this one we're good to go. And that's exactly what happened. It panned out. So we entered here at this fair value gap. I'm gonna show you that I did. Yep. So there's my entry right there. I'm gonna make this a different color really quick. Nope, that ain't it. Make it red. Yep, make it red. So this right here. Oop, do that. And there we go. My entry is right here. This 1 minute fair value gap. We're headed higher. Went above this order block. That kind of gave me the confirmation to go, okay, we're good, and we broke this high. Now, if I wanted to, I could have took another entry here, because you see we broke this right here. Effectively is now a market structure shift, so an MS or market structure shift, right? And so basically with this right here, any fair value gap that forms above this market structure shift right here, you could have been good to take that one, but I mean, I was already in 2 trades, and apparently I was over the margin for my funded account, so I just let it be, and I took partials accordingly. As you'll see on the dashboard right here, you'll see that my trades 0.25 and then 0.16. You'll see two of them. This is actually me taking profit. So these two together is actually one trade that was risking about 0.32 lots, and this one right here was one trade. These two right here, the 0.25s, they actually combined as a 0.5 lots. And so basically I just like took partials as I went, took half off, and then just let the rest run. And thankfully we went ahead and handled business. So there we go, y'all. Yeah, those are my trades for the day. The trade currently that I'm in right now, the sell, as you can see, is tapping back into it, but that's because we have the press conference going on right now. So depending on what happens with that, like I said, I'm comfortable with losing this. Right, I have my stop loss in place. If we lose this trade, we lose this trade, and I'll just be looking to I'll probably withdraw again, but my next withdrawal isn't until the 8th, November 8th. That's when my next withdrawal is allowed or permitted. So because there's a 7-day withdrawal or a 7-day deadline, you gotta wait after taking your first trade. I took my first trade since my last withdrawal today, right? So now I gotta wait 7 days. But yeah, other than that, guys, that's what we're rocking with right now, and that's how I got my. So I showed you guys my second payout already, and basically, yeah, we got that. Actually, did I show you my second payout already? Second payout, 10/26/23. There we go. All right, and there we have it, y'all. Yeah, got the second payout. Now we're working on this third one, and we'll just see what it do. But if we lose this trade, I'll probably be done for the week, and I'll look for something in the next coming week or so. If not, if I don't feel like taking anything, I'll just take another withdrawal out, no problem. My goal is I'm just trying to milk this funded account while I got it. You know what I mean? I'm gonna milk it for what? I'm gonna milk it, right? Just keep withdrawing. I'm gonna milk it. Ain't no need to push hard for it because I already worked hard to get it, so I don't want to lose it doing something stupid, you know what I mean, or over leveraging or anything, or over trading. So, this how I'm trading right now. So, if you guys enjoyed the video, if you learned anything, leave a like in the video. Also, comment down below if you learned anything, or just give me some feedback on my content, or let me know if y'all want to see me do videos about anything, like what it's like being a funded trader, or if like my mindset has changed a bit since I've become funded. If that's something that you want to see, let me know in the comment section. And also subscribe to the channel. Don't forget to do that. But yeah, man. So yeah, this is Jay Davari, and I'll see y'all in the next one, man. Peace out.